Welcome to Finance Deep Dive. Have you noticed your local bank branch has disappeared? You're not alone. But the full story is more surprising than you think.
Since 2010, the U.S. has lost a staggering 20,000 bank branches. Just let that sink in for a second. 20,000. And the pace is actually accelerating.
So this video is all about unpacking the massive contradiction at the heart of American banking today. Okay, let's dive into this.
First, let's just try to grasp the sheer scale of all these closures. It's happening so fast. In just 1 week last year, 32 branches shut their doors for good. That's wild.
Now, what's really interesting here is that it's the biggest names in banking leading the charge. We're talking Flagstar, Wells Fargo, US Bank. They're all in on it.
But just as the branch seems totally doomed, some banks are making a huge bet on its future.
So here's the crucial point. Is this the end of an era, or is something else entirely going on?
Some industry experts argue that the human connection is still irreplaceable. It's like Dave Martin says here, people go to see the banker, not just the building.
And this just illustrates the contradiction so brilliantly. JPMorgan Chase is in the middle of a multi-billion-dollar expansion, adding over 500 new locations. 500!
And it's not just Chase. BMO is selling off over 100 branches in some areas, while at the same time opening even more in other places.
Let's move on and see how this all connects. Because this isn't really about closures. It's a strategic reshuffling, and it's driven by 3 key factors.
First off, our habits have changed. Look at this. Over 70% of us now prefer to bank on a screen, which makes a lot of physical locations just unnecessary for day-to-day stuff.
Second, these massive mergers and acquisitions are creating mega banks that, they need to cut costs. And the easiest way to do that is to eliminate overlapping branches.
And third, it's all about a concept called deposit franchise value. It sounds complicated, but it's really the secret key to understanding this whole thing.
So banks are closing branches where customers are super tech-savvy and quick to move their money for better rates, but they're keeping them and building new ones where deposits are stickier.
So all this reshuffling means the very purpose of a bank branch is transforming right before our eyes.
The branch is evolving. It's going from a simple place for transactions into a high-touch center for complex advice and even community engagement. But this new landscape, it's not being created equally, and it has some pretty serious consequences for millions of Americans.
This whole transformation is creating what are called banking deserts, leaving entire communities without access to physical financial services. And the impact is just devastatingly uneven. Nearly half of residents in majority native tracts live in a banking desert. That's over 12 times the national average. It's unbelievable.
This map shows the national scale of the issue, and it really highlights the communities that are being most affected by this massive shift.
And here's the real kicker. The very people who often need in-person banking the most, because of the digital divide or the complexity of their needs, are the ones losing access.
So what's the ultimate takeaway here? The bank branch isn't dead, but it might just be becoming a luxury service. Thanks for watching. If you like the content, don't forget to subscribe to Finance Deep Dive. It motivates us to keep posting.